Anyway, let's get into these individual stocks. Barrick Gold Corporation, we haven't spoken about this one before. It's a Toronto-based gold and copper producer.
Right, so it's an interesting company founded in the 1980s by a legendary gold miner called Peter Monk, and it was a global player, although it spun off its African operations. So where it has operations is South America, North America in the Nevada area, as well as Australia, the Super Pit in Kalgoorlie, and a couple of other things. But it's the largest gold miner by market cap by far.
Market cap, $20.5 billion US, currently not profitable, but has a historic dividend yield of just 0.4%. Let's get the graph up on this discussion.
Right, so that's an interesting chart. So that's the New York Stock Exchange listing. It trades actively on both markets, and you can see it's come down, but it has had a good 2016.
Very closely correlated to the gold graph that we have just seen.
Yeah, absolutely. And you're going to see all of these are going to be fairly correlated to gold because that's their output, and they unfortunately have no control over the output. You know, what these companies do have control over is obviously their costs, and that's where I think Barrick is doing very, very well. So I suppose it's the cost and really the debt that you want to look at. So Barrick, you know, was sitting on about $13 billion dollars at least worth of debt. They've been actively reducing that. They've also managed to really increase their free cash flow. So this is now, in the last report, it was the 6th quarter of positive free cash flow, which is, you know, is fantastic for a company. And yes, again, this is all feeding into it because of the higher gold prices. But it's also, I think, a lot of work that management has done to really bring down those all-in sustaining costs. Which
and no South Africa exposure.
Yeah, they had some substantial African exposure, which was in Tanzania, and they spun that out in 2010. They created a company called African Barrick, which has since been renamed as Acacia Resources, so that's separate, although they do have a stake in it, I think, still. But the mining operations itself, it was a conscious attempt, I think, to reposition it as a developing country producer, sort of. Major assets in Nevada, as I said. Individual mines, most of them quite profitable, lots of high technology applications in order to try and increase productivity. Australia, remember that's the Western Australia, closer to Perth, out in the desert in Kalgoorlie. They have this pit mine which has got, you know, pretty average grades, but it's an open cast mine, so you don't have to worry too much about that.
If you were positive on the gold miners, well, obviously then you would believe that the gold price is going to go higher. Would you back the heavyweight in the sector?
Yeah, I think there's a lot to be said for buying scale as well in this industry. I mean, if you compare the majors, but all of the ones we're going to look at today would really be class majors versus juniors that are really exploring. I mean, here you've got companies that have the capacity to go and buy out juniors to, you know, as they deplete their assets, they can go and find new assets, you know, in the way of exploration, but also in the way of just buying out smaller mines. So I think there's a little bit more sustainability in them, but also to Paul's point, those big open cast mines, you know, this has an enormous amount. I think they've got about 91 million ounces, you know, proven and probable. So there's a lot of ore in there, but also a lot of these big open cast pits that have been mothballed. So the one that I'm thinking of is it's the Pascua Lama in Chile. It's the border of Argentina and Chile, which in 2013 they mothballed because the gold price was diving, because, you know, the Chilean government had a little bit of problems with, you know, environmental issues as well. But they still own the asset, and I mean, with gold prices rising, those suddenly become viable again, and then you know, your provable ounces really increases dramatically, and you can see this uptick.
Let's call it, Paul, unless you want to add something there.
Sorry, what is the theory? Why is the gold price going to go up again? Because I need to know this before I'm going to decide whether to go hot or not.
There's uncertainty, political uncertainty
so
ahead of the US
end of the year, you think
the end
the
of
wild,
the
you described it as the what? The wild?
the wild card factor was really just a polite way of saying if Donald Trump becomes president of the US, what is going to happen to the gold price? And you've got a lot of international market commentators right now saying that a Trump presidency has not been priced into the markets.
There's always something to worry about. You could also add Brexit concerns to that list of things.
We're in the wave of that being executed now. One thing that the vote went through, but now they actually have to extricate themselves. And that's
so my default scenario is that it's not going to go wild. We're going to have a very nice end to the year and a happy Clinton rally. So I'm going to go not hot on Barrick on account of the gold outlook scenario.
Rose-tinted glasses, I see then. Do you see that pink hue on his glasses?
I'm going to go a little bit different here because, again, you can't control what the gold price does. So, I mean, everyone has their own gold view. My view would be that we're going to have interest rates being raised probably almost definitely in December from the US. That suddenly gives a little bit more yield to US treasuries. You know, a non-yielding asset like gold, which is just a currency without a yield, essentially.
Still got a long way. Interest rates have got a long way to get to a reasonable return.
As they increase, gold should become less attractive. So
That's
for me,
still some way
I think
off.
that's my opinion on the gold price, but everyone has an opinion on the
Hot
gold
or
price.
not? Hot or not on Barrick?
But I will go hot. But I'm
You
going to
will.
go hot on Barrick because of the underlying operation, because of how low their all-in sustaining costs are, and because of the size of the company as well. For me, these companies are hot or not based on how they operate, not necessarily where we think the gold price is going.
Or hot or not?
So not hot.